Mr. Unemployable. And if you guys see this title right here to your left, we are going to be covering market structure with a twist. Okay, now what does a twist mean? I'm going to go ahead and explain that to you as I get a little bit more in depth into what market structure is. But this is a little bit of an intermediate to advanced market structure education video that you guys can review, rewatch, that way you guys can understand exactly what it is that we're going over here. But market structure pretty much deals with again, the structure that the market creates, right? It could be patterns, it could be breakouts, it could be consolidation. In this specific scenario, we're going to be covering trends, okay? So the market structure in the trend is perfect opportunities for entries during a trend movement. Okay, and you see I marked this trend moving up here. So we have our uptrend right here with our lower lows. I mean, our higher lows and our higher highs, higher lows and higher highs. And then you hit that equal high, and then you have lower lows, lower highs, lower lows, lower highs, and so on and so forth as the trend starts to reverse. Okay, now, how can we use market structure for us to catch great entries, okay, and maximize profit? Let's say that you took a position on a buy right down here. Okay, let's say that you took a position for a buy right up here because you saw previously this was going to be a nice buy. But there's always opportunities for you to catch an entry here, catch an entry here, and catch an entry here. Okay, and so on, as long as this continues. Okay, now how do you identify that these are going to be entries for your zones? Number one, the first movement is always based on a retracement pattern. Okay, now this doesn't have to do anything with market structure, but it's going to help you analyze where the first point will come down to. And based on your Fib tool, you're going to get a retracement between 50 to 618%. That's going to be your most likely, or you see my two numbers here are highlighted in red. It is my hot zone, right? I call it my hot zone. Market comes up, retraces, gives you 50% chance to get back in. You jump in, boom. Now you ride it to a higher zone. Now you have two entries in one single movement. Now what happens? Market comes up, it breaks your zone, starts to turn around. Now market structure with a twist comes in. Okay, you start throwing this little magic word that starts to create more confluence in the market. You start to get more confluence. Okay, confluence is pretty much multiple confirmations. It's multiple confirmations in the market that pretty much help you identify and verify what the market is doing or what you're analyzing. Okay, so let's say you go jump in here, retracement zone, enter one more time, comes up. Guess what the market's going to come down to? Confluence tells you, right, that your zone is right here. Market comes up, or you know what? Let's use our zone blocks. Okay, comes up, breaks through, retraces to that zone, and then you get into another buy and shoots up. Now, not only is this here a confluence simply because it was a retracement zone or a key level, it is also what you call the next higher low, as well as the retracement for this movement up here. All right. So you have your zone here. Market shoots up. First, second buy should be that retracement entry. Market breaks through. Confirmation number one is the price will come back to this key level, which is a confluence. And number two is when a movement is continuing, price breaks through a zone, will retest that zone and then shoot back up, which is more confluence for those trades. Market shoots back up, okay, breaks through your previous zone, it starts to turn around. Most likely, it will come back to this zone right here. Comes back down, more confluence, key level zone, as well as retracement, continues to break to the upside. It breaks through this zone. Before you even get to the top, you just start to mark this right here. Price will come up, retrace back down. You enter right here. Again, more confluence based on a key level as well as your retracement. Break, retest, retracement, shoot back up. Okay, one more buy. So on this single movement, you could have caught 1, 2, 3, 4, 5 buying opportunities. Now, a lot of people try to maximize by putting sell entries here and pretty much scalp a trend line. Okay, but I prefer not to do that. If I'm going on a buy, I don't want to go against the trend. Okay, my trend is up. I do not want to trade against my trend. I only want to stick to where the trend is going to. So if the trend is going up, I'm only going to be buying and looking for opportunities to add to my already buying orders because I cannot have confluence on both a sell and a buy. Okay, they contradict each other. You want to make sure you only make sure you do this for the current trend of the chart. Okay, now once you get to this zone, when the market turns around, you're going to get double tops or an equal high. Okay, and then you start to look for reversals. And the main point or the main opportunity for a reversal is when it breaks the higher low. Once this higher low is broken, okay, once this higher low is broken, now you know that you're going to be looking at a lower low because this higher low is no longer valid. The lower low comes in, it starts to make a pattern, it starts to turn back up. Now the trend is going to be most likely a downtrend. So you're going to look for sell opportunities. Now, if you want to be, again, ahead of the game, you extend your zone and market game will pull back here based on retracement and key level. Okay, now let me give you a little more confluence based on this. I always have a saying, if you want to know what's going to happen in the future, just simply look to the past. And if you go ahead and extend your zone backwards, it's going to line up perfectly with some kind of, whether it's a wick rejection or if it's price action, you're going to see that line up and it's going to give you even more confluence in your trading. Okay, you take a sell position right there. So now you go ahead and you sell this market. Can you get into a sell right there? Boom. Okay, you get into a sell. Market comes right back down. Okay, it starts to turn around. You're going to look for more entries, right? Simply, again, this should line up perfectly like that. Now, I want you guys to remember, I love to use the zone boxes instead of my regular lines like these because the market doesn't go by lines. It goes kind of like by zones. If you watch football, it's more like a zone defense. Okay, so it wants to zone out, play defense on zones. Another chance to sell right there. You take that one more time. Right here, boom. Market comes down, starts to retrace. You look to the past to get a better understanding of what might happen in the future. Right there, boom. You take another opportunity for a sell right there, and then you let it ride. Okay, so that's pretty much market structure, right? Now, along these trend lines, there are multiple structures you look for. Okay, so for example, we see an M pattern right here, which is a double top. You see a head and shoulders right here. Okay, so your head and shoulders is going to be a movement that creates one left shoulder followed by a head, which is going to be these two. Okay, you get a neckline and then your right shoulder and come back down. Once this, you see this pattern indicates a sell is most likely to happen once it breaks. And guess what? Boom, it broke right there. All right. So there's another structure right here. The chart, the pair gave you a head and shoulder pattern. Okay. Now the market breaks through. You already know the trend has been reversed because you see your lower low. You're seeing lower highs as well. And that will give you even more confluence as to when to enter these trades, when to get out of these trades, and when the trend is reversed, which is another great indication of another great indicator that adds to confluence, right? Just simply draw a trend line. If you were taking this trend line for a buy, okay, you're writing this trend line all the way up. Okay, it's going up, it's going up, it's going up. At one point, this is going to break. like it did here. It broke, and then it'll retest that zone. That zone lines up with your shoulder. It will retest it. Now you know your trend is broken, and you're most likely going to see a downtrend happen right here. Okay, this is market structure. It's not. It's a simple, analyzing the charts, knowing the way they move, knowing where they're going to retrace to. But adding confluence to this will make your trading a lot more accurate, and it'll give you even better entries. That's what you want. You want better and you want perfect entries in this market. Okay, and confluence is going to help you achieve that. Okay, now let me give you guys a little movement, since we're talking about market structure, on a way that the market loves to move. Okay, so let's go ahead and open up another chart right here. I need another blank slate. So let's look at the XY. Okay, now the markets, remember this, love to move in a structure of three pushes. Okay, three pushes. I'll give you three pushes. Okay, and I'll give you another structure that institutional traders know this. Okay, and it's going to be your, it's going to be your WAAM, and the other one's going to be your MVVW. Okay, so remember that. And the way the market moves is going to be in the following pushes. I'm going to go ahead and set out the Elliott wave so you guys can see how it moves. I'm going to make them red. No, I'm actually going to make our uptrend blue. Okay, it's going to go up, retrace, up, right, retrace, up. Okay, now when you get here, you'll usually get a double top. Double top is best drawn out with the ABCs. So you go from here to the middle, back up to the double top, and then it shoots down. Okay, now once you get to this zone, your equal highs come up. All right, so previously, before you even saw this, usually what you get over here is an ABC pattern like this. Okay, or pretty much a breakout of consolidation, as we like to call it. So let's make this look a little bit nicer. That way, it lines up with our consolidation zone breakout, which is going to be again a structure in the market that indicates a breakout. Right. So your zone has been consolidating right here for a while. Market breaks out, starts to create even more structure. You get your double top. Now what do? You're going to be looking for reversals. Okay, market comes down, shoots back up. Sorry, let me erase that. Comes down, shoots back up, comes down, shoots back up, and then comes down. Okay, now this is what we just saw, what I just showed you earlier, but this one is more structured in the way of what we call the three pushes. The market loves to move in movements of three. All right, it loves to give you the three pushes, and you can see push number one right here. Move number two is right here, which is going to be a second push. And then push number three is going to be right here. When the market gives you those three pushes, it will most likely become exhausted, try to do a double top, right? Try to break out a little bit higher, but it cannot. And then it'll go ahead and reverse, which will give you three more pushes to the downside. Right here. One more right here, which is number two. And then number three will be right here. Okay, 1, 2, 3, double top, 1, 2, 3. Okay, so if you look at these patterns, what I wrote over here, WAAM, is going to be your W pattern, followed by an A, followed by an A, followed by an M right here. To make it easier to read, just go ahead and draw some lines right here and get your A's lined up. Okay. And then you get an M followed by a V, another V, and then over here you get another W. So this is the structure the market loves to move overall. You know, if you better see this in a 4-hour higher time frame. That way you can overall see the long projection of where a pair wants to go to, what it wants to do. If the movement is finished to the upside, if it's finished to the downside, it is a great way for you to analyze and also determine if a bull run is complete or if a bear run is complete. Okay. So I hope you guys enjoyed this video. Rewatch it in case you need to get more information and how to use it. And remember, all of this is based on market structure with some confluence trading, because all of these lines, all of these zones will always line up. Okay. Even if a market is running bull for 10 days, when it turns around, it will have to come back and respect every key level that it touched or created in the past. And some key levels date back to years. If you go back and switch to a yearly time frame or a 1 day or weekly time frame or a monthly time frame, those key levels remain there for a long time. All right, guys. So thank you for watching this, and I'll see you.